Welcome back to my channel Iraqi dinar revaluation news update. This is a very good layered question. Let's break it down carefully. Summary of the situation. Iraq's national card scheme means local payments inside Iraq will be processed without using international networks like Visa or MasterCard. Transactions inside Iraq will run only through a national switchboard using Iraqi dinar (IQD). The move was triggered partly by US sanctions that froze certain accounts, like the PMF salaries, using international systems. So this is about financial sovereignty. But it does not automatically mean Iraq is ditching the US dollar for trade or reserves. Direct impact on the dinar-dollar exchange rate. In the short term, the national card scheme itself does not directly change the exchange rate. Why? Because the IQD-USD exchange rate is mostly driven by Iraq's oil sales, which are priced in dollars, the central bank's foreign reserves, mainly USD, supply and demand for USD in Iraq's local markets, for imports, travel, remittances and external debt. A local card network just processes local IQD payments inside the country. It does not increase or decrease Iraq's dollar reserves or oil earnings. Possible medium to long-term effects. However, indirect impacts could appear over time. Less leakage of fees abroad. If Iraq uses its own payment rails instead of Visa and MasterCard, it saves on foreign transaction fees. Small effect, but keeps a bit more money circulating domestically. More control equals more ability to manage IQD liquidity. If the government can isolate domestic payments from external pressures, it could help stabilize local cash flow, but only if trust is maintained. Reduce trust or dollar access pressure on parallel market. If people fear that the system is too closed or used for political censorship, they may move more money into cash dollars or informal dollar channels. This could increase demand for physical USD, putting upward pressure on the parallel market rate, weakening the IQD unofficially. The bigger issue, dollar dependence. Iraq still sells oil for dollars, its main source of foreign currency. So unless Iraq starts selling oil in another currency, highly unlikely soon, or replaces the dollar with alternatives for trade, the dollar remains the anchor for the IQD. A local card system cannot break that link by itself. Bottom line. Short term, the national card scheme won't directly strengthen or weaken the dinar against the dollar. Longer term, if it boosts local trust and reduces foreign political interference, it could help monetary stability. But if it's seen as a tool for surveillance or capital controls, people may hoard dollars or use informal exchange channels, which can widen the gap between the official and parallel rates. The end of dollar dependence or the beginning of censorship. The national payments project raises the question of financial sovereignty. In a pivotal step toward internal monetary independence, the Central Bank of Iraq, CBI, issued an official circular to all banks and electronic payment service providers announcing the commencement of the implementation of the National Card Scheme project. This is a local payment system managed through the national switchboard, completely separate from international platforms such as MasterCard and Visa. The decision comes at a particularly sensitive time, following the Popular Mobilization Forces (PMF) salary crisis and sanctions imposed on several banks, amid indications that Iraq is shifting to a relatively closed monetary environment in the face of external pressures. A national system excludes international companies. According to a circular obtained by Baghdad Today, the central bank has ordered the launch of a local system for settling bank card payments within Iraq, without going through any international entity. The circular clarified the need to adopt national codes such as BIN and AID to identify payment cards and link them to the national switchboard, which implicitly means eliminating any reliance on global payment networks such as Visa and MasterCard in local transactions. The circular emphasized that this project is exclusively local, and that it will be completed by the end of this year. in preparation for its official adoption starting early next year. Motives behind the decision, from sanctions to mobilization. Banking expert and former central bank official Mahmoud Darga told Baghdad today that the decision is partly linked to international sanctions and some pressure on Iraqi banks, so an alternative internal system is being considered. He added, Iraq faces no legal or technical obstacles to establishing this type of system, and many countries have preceded us in this. But he explained that local systems remain limited and cannot be used outside the country's borders. It's worth noting that the decision came after the popular mobilization forces salaries were frozen at some banks, linked to international payment systems, opening a new door for the central bank to restructure its payments infrastructure away from international political influence, monetary shift or financial isolation. The new approach coincides with escalating tensions between Baghdad and Washington, and with the mounting pressure on major Iraqi banks accused of financing entities sanctioned by the US. In this context, the central bank appears to have decided to proceed with a project that protects the domestic market from any potential political freeze. However, this option, despite its importance in terms of sovereignty, raises questions